Hi traders, this is Cynthia of Day Trade Forex, and in this video I'm going to show you two special features of my advanced Neon Breakout system that made trading the non-farm payroll red news event this morning very easy. And I'm going to show you the two features that I like especially about this trading system. And the first feature is the fact that the charts have an indicator that shows you the major and minor key levels. Those are price levels that the banks and the hedge funds trade between, and they trade from key level to key level. And the key levels are 25 pips apart, so each dashed yellow line is 25 pips between each key level. And then we have the major key level, which is a dashed magenta line, and from this magenta line to this magenta line is 100 pips. And we can see non-farm payroll this morning exploded, starting right at this minor key level and went to the major key level and pushed past it to the next key level and then up to the next key level. So you can see very clearly that the banks and the hedge funds are trading between these key levels. This key level here is approximately 25 pips. Here's another 25 pips. Here's another 25 pips. So all in all, after spread, that's 75 pips for the news event, the non-farm payroll news event. And you could have gotten positioned an hour and a half before the news event when the big arrow appeared and everything is aqua green, and in the volatility window down here the aqua bars and the yellow line are above the red trigger line, and this is your trend line. And once it's past the 50 and 60% level, that shows very strong momentum strength, relative strength. Here's your RSI levels. So this is the trend line, and when it went beyond 60%, that's a very strong strength. That's about when the aqua arrow appeared, and this is your momentum indicator, and it's bullish being the same aqua green. So this was your early entry an hour and a half before non-farm news event. So this entry was right between these two minor key levels. So you could have picked up not just 75 pips if you had waited until the hot dot appears, but you could have gotten another 10 or 15 pips by the early entry. Now the second indicator that I like very much about this trading system is in the bottom window. The advanced Neon Breakout has two divergence indicators instead of just one like in the basic system. So right about the time of non-farm payroll explosion, everything was very bullish in the momentum or volatility window. The trend was already very well established, being very strong, and this is your momentum indicator, and this big aqua bar is your burst of momentum. And then it goes flat. Now this is the second feature that I like very much about this system, is that it shows divergence. Now divergence is when price does something completely different than momentum. Momentum happens to be a leading indicator, so price will always follow what the momentum does first. So if momentum is falling off, price is going to decline. If momentum is picking up and getting stronger, price will follow and go up. So during this consolidation period after the big explosion, you can see the momentum window down here. The momentum bars have turned pink and are sloping down, and so is the yellow signal line sloping down. That shows you that momentum is falling off, and this creates divergence because the momentum is declining, but the price is staying very flat. And the price staying very flat, it's also sitting right on these signal dots, another trend indicator. and price is just staying very close to these dots. When the dots are close to the candles, it means there's no volatility, there's no momentum. Momentum started to pick up right here when the candlestick moved away from the dot. And if you let your eye run down, this is when the momentum bar turned green again and increased in size. It didn't increase very much in size because momentum was already spent on this first big push in the first 15-minute candle. Momentum is not very strong. However, there was another push to the upside, and that would have been another re-entry. And if you had gotten in at the bottom of that candle at the beginning of the 15-minute candle and stayed in until the red hot dot appeared, that's another 25 pips. So that's actually from one key level, enter right on this key level and exit on this key level. So you can use these key levels as entry and exit points if you just want to scalp for a 25 pip move. They're very reliable. And now the hot dot has appeared and price is starting to fall down. You can see the trend line is falling down and momentum is below the red signal trigger line, and the momentum bars are pink now. So everything right in here would have been your signal to sell and go short, especially because the trend line now has passed below the 70% RSI level and heading almost to the 60% RSI level. That's a fine place for a sell to take some profits before the end of the day. It's possible that profit taking will keep happening until price hits this major key level right here of 1.1300. So price could be headed down another 25 pips or so before the end of the day, just as basic profit taking on a Friday afternoon. At this point, since the red dot appeared, which shows you the top of the price movement, now it's sitting right on this key level, so that's almost 25 pips. That price has fallen off just in regular profit taking, and it's possible before the end of the day we'll see another 25 pips as a profit taking, as profits are being taken off the table on a Friday afternoon before the weekend. So this is a great sell entry right here if you want to try and scoop up 10, 15, 25 pips at this point. And now I want to show you the pound US dollar because, let's see, this is using a template where the key levels are 50 pips apart because the pound moves better than the euro US dollar. So these key levels are 50 pips apart because price action usually moves 50 pips instead of just 25 pips in a range like the euro. This is the euro, and you can see that price just kind of remained in this 25 pip range here for a long time. And look at the average daily range, 58.5 pips averaged over 10 days, and the euro tends to stay in this very narrow 25 pip range, which makes it very hard to trade. Here was a euro news event the other day, and you can see that price exploded from this minor key level and went all the way up to this key level, which is almost 85 pips. Then it went into consolidation and went back into its normal 25 pip range until non-farm payroll news event this morning. So we use a template that's provided in the trading system for the euro for a 15-minute chart where the key levels are 25 pips apart. For the pound, because it moves a little bit better, this is actually not 69.8 is not really a big mover. It used to be a better mover, but because we're kind of in pause right now because of Brexit, the pound US dollar doesn't typically move as much as it used to. But here you can see that between this key level entry here and where it hit at the top of non-farm payroll this morning, that's around 50 pips. So the entry would have been way back here when the momentum window, everything is bullish, and here you have everything turn green, and the green arrow appears plus the blue hot dot appears. So that would have been your entry way back here, and that's many hours. And price just hovers around this major magenta dashed key level, and then starts to move right around here. When it pushes past the major key level, this would have been another nice little entry, and then it just keeps going up and then comes down, and you didn't have any real warning hours before of what the direction was, but it just kind of exploded. So the pound US dollar wasn't so easy to trade for non-farm payroll this morning, but it did explode 50 pips up from the beginning to the top right here at the major key level. And now this is not divergence because price declined, and also momentum declined, but the trend stayed fairly strong even though the momentum was declining. And here it goes a little bit flat and then starts to push up. This is your momentum bar that turns aqua again. This would have been your re-entry right here. RSI for the trend line is very strong, and everything turns green again, and that would have been a nice little re-entry after non-farm payroll right on this candle here. At the beginning of the candle to this key level is 16 pips. Then price bounced off of the channel and the little red arrow appears, and that's right at 25 pips. So this little move late morning, hours after non-farm payroll, after the pullback, after a little bit of consolidation, price continued to move up. Now price is declining. People are taking profits. Now we have a red entry arrow. Everything is red. And in the volatility window down here, this purple trend line is way down at 40%. So right around 60%, 50% would have been your sell entry when the momentum bar was pink. So this would be a nice sell entry right here, and your target would be this next key level. So if you entered now, the next key level is 37 pips away. And that's basically back to where the pound started when it shot up this morning for non-farm payroll. The divergence window is very interesting, but the key levels are so interesting and they just hold so true. Now I'm going to flip through some more charts and show you. This is non-farm payroll again, and price shot up to, it started at this minor key level and went to this minor key level. That's 25 pips. Then after some consolidation, it went up another 25 pips. So that was a 50 pip move in the New Zealand US dollar this morning. You can see the same thing happened as it happened with the Euro US dollar. It went into consolidation after the first 15 minutes of non-farm payroll, and the momentum dropped off. But the trend line stayed very strong, and on this bar here would have been another re-entry. If you had gotten in at the beginning of this bar to that minor key level, that's another 17 pips. The New Zealand dollar only moves on average 42.6 pips per day. That's averaged over 10 days. So we're using a template where the key levels are spaced 25 pips apart. Now the USD CAD had actually two news events this morning, because the CAD had economic news and the US dollar had economic news. So the USD CAD really moved very strongly this morning. Here you can see that the price started right at the minor key level and went down to this key level. Because the CAD moves a little bit better, I'm using a template where the major and minor key levels are 50 pips apart instead of 25. So that was a 50 pip move just in the first 15 minutes, and then it moved down. It didn't quite hit this other minor key level, which would have been 100 pips, but it bounced right off the channel support. So that was like 89, 90, 87, 85 pips. And everything told you to take your profit, get out of the trade at this point. Actually, you can see down here in the momentum window that volatility, we had divergence because price kept declining, but the momentum was shrinking back to the red line. So momentum is slowing down for this downtrend. And then once the yellow line crosses the red signal line, which would have given you the absolute most pips possible out of this move, now we're just in range consolidation, and it's not tradable. And of course, here would be a trade entry. On any other morning I would take it, but this is Friday, so I don't do that. The US dollar yen, we had clear trend hours before non-farm payroll. Here's the big push to the downside, and the momentum is declining. The aqua bars are shrinking, and the yellow line, everything's shrinking back to the red signal line. Then we go into a very small whipsaw type range after the big move, and it's not tradable anymore after this big push. But you could have positioned yourself right here hours before when everything turned pink and you got the big arrow. That was a 50 pip move, and it was almost 50 pips just in the first 15 minutes. Now I want to show you the gold chart. This long candle was the non-farm payroll, and here you can see your divergence. This is consolidation, and in the volatility window, divergence is easily seen because the momentum is dropping off. And then it increased again, and there was a slight push to the upside, but not very strong. And then this is a hidden divergence arrow that shows you even when the price is pushing up, this is a hidden divergence arrow, and you can see the trend line starts to go down and the divergence momentum indicator starts to go down. So even when price was still pushing up, you had a hidden divergence alert, and you'd get a pop-up alert warning you. And then of course when you hit the top of the resistance channel, the little red arrow appears. If you were long at anywhere in here, then this is when these two arrows appear, it's telling you there's a trend reversal coming, and to exit with as many pips as you can gain. And you can see here the red hot dot shows you the top, and then everything turns pink for a sell. So that's the gold chart, and you can see here how gold ranges between, I have it on a template where just the magenta key levels, because it can range 100 pips at a time. So that's basically a 100 pip range, and it's contained within the 100 pips. And only with the beginning of the news this morning, hours earlier, did it push past 100 pips. But gold I find a little bit hard to trade, but you need this template where it's actually, it would be easier with a template that would be the 30-minute 1 hour template. And here you can see much easier using this template where the key levels are spaced 50 pips apart instead of 100 pips apart. So gold tends to make 50 pip moves a little bit easier to see. So this template where the key levels are spaced 50 pips apart is a better template to use for trading gold, because here was your entry at this key level, it pushed up 50 pips, then another 50 pips, and it can't really push much higher than that. It reaches this channel resistance and everything changes. So in a 15-minute chart, using a 15-minute template for the key levels, you can see easier when your entry is right around one key level and exit is 1 to 2 key levels more, giving you anywhere from 25 to 50 pips at a time. This back here was your major entry. This is one key level, that's 75 pips, and another key level, that's 120, 115 pips from the beginning of this move. And that was position several hours before non-farm payroll. And then the next chart is I've been trading some indices, and my favorite indice for evening hours for the Asian session is the Japan index, and it doesn't normally respond to US news very much. This is a 4-hour template where the key levels are spaced 100 pips apart. So this is 100 pips from here, and that major key level there, that's 200 pips. So you can see back here, this was the major entry because everything turned blue, green, and then we get the big entry arrow. So from here to this key level, that's 50 pips, and then it pushed up to hit a major key level. So all in all, that's about 150 pips after spread, and then it just consolidates around this major key level. Then there's some profit taking, and this is another entry right here at the beginning of this key level. So if you just trade from key level to key level, and when the candle turned red, that's 111 pips. So it's basically a 100 pip move, and then it bounces off this resistance channel and gives you a red arrow. So if you hadn't gotten out already, you would get out. But here you can see momentum is drying up, so the slopes are all going down. So we have divergence. So price is pretty flat, but momentum is slowing down and dropping off. So that's your divergence. Anytime you see the divergence happen, then there's no reason to stay in a trade if momentum slows down. You need momentum behind you, otherwise it just goes into a range. No reason to stay in a trade when it's in a range. So when you see momentum slow down, and especially if you see price hit the top of the channel and the little red arrow appears, that's the very late exit, because already momentum has sloped way down to the red trigger line here. So you don't need to wait to exit. Whenever you see the trend line change color and start to drop off, and the momentum, the bars and the yellow signal line are dropping off, and of course here at the same time you had a candle turn pink, that's just a clear exit signal to me. Now here's the crude oil, and I find this very interesting to trade. This is using a 4-hour template, and it never really reached. This is your next key level of, well, this is a little bit different. So this is it says 25 pips basically. So from one key level to another, it moves differently than all the others. You can see that it doesn't quite move 25 pips at a time, but the value of each little move is worth a lot of money. It doesn't need to move a full 25 pips before you've already made some good money. The divergence window is very interesting. It's showing you some hidden divergence, which basically in this instance just was whenever the candle turned pink, and then price did start to go up again and then bounced off the channel. And now let's look at the DAX, because the DAX is very interesting for European traders. And this is a 4-hour template where each magenta line, actually these dash magenta lines are to 50 pips apart, and the solid magenta lines are actually 100 pips apart. So the template has to be for a 4-hour, because the DAX is funny with the key levels with the indicator. This is the best I can get it to do, but you can clearly see that the DAX likes to trade between these major key levels. However, sometimes it stays in a very tight range like this. That's very hard to trade. So like anything, you're waiting for a big move, and here's a big move to this key level, then it went all the way down to this other key level. That was a wonderful move, but it doesn't always do that. So for European traders who like to trade the DAX, it's pretty interesting to trade. An alternative index that you can trade during the European London hours is the UK 100 index. That's another one that European traders can trade. But I like the Japan index for the Asian session. During the US session, I really like the crude oil. And this just moves so great during the US session. I make actually the most money with the crude oil because the value for each penny that it moves is such actually a large amount of money. It requires a lot of leverage, so your account can't be too small, but if you just trade 0.01 micro lot, you can actually make really good money just trading 0.01, 0.02. If you have a much bigger account, you can trade 0.05 or even 0.10 mini lot. But you have to be careful because the cost of the leverage is so high. But it means that when it moves and you're on the right side of the trade, you can really make a lot of money with the crude oil. That goes for all of the indexes. The cost of the leverage is high, so when you win big, but when you lose big. So I wouldn't recommend trading indexes unless you're a really good trader. And they're not so easy to trade. Sometimes, I mean, they move not unlike any currency, but the cost of the leverage is so much greater that it makes them riskier to trade, because when you lose, you can lose big. But conversely, when you win, you can win big. So that wraps up this video. I just wanted to point out to you the major and minor key levels, and I just love this key level indicator, and I love the divergence indicator in the advanced template, because you get two indicators and between them they show you trend and momentum and divergence, and you can actually use this one trend line for entry and exit. So here you can see when the trend line, well, actually it happens to be that the yellow line also crossed, and then this is your setup, and then on the next candle right here was your entry. So momentum shows you, the momentum window shows you entry and exit. This is entry, this is take profit, so exit, and right in here was another sell entry. So these two lines, you just have to get to learn how to use them, understand them, and I don't know if my video is helping. It's a little on the complicated side. I would say this is not for a beginner trader, but for an intermediate trader who practices, they can do it. And for an advanced trader, this is a great template because it'll make sense to you, because you already understand momentum, possibly divergence, and the icing on the cake are the key levels. Now the key levels, anybody can trade between, whether you're beginner, intermediate, or advanced. They're not hard to understand. The divergence window is a little more complicated, but once you learn how these lines, what they mean, and what the bars mean, then it becomes very easy. You keep hearing an alert in the background, and that's the alert that is, the hot dog gives me an alert, and it tells me to look for a sell. And then when the zero line, when the momentum window, when the lines cross the red signal line, you'll get a pop-up alert. And so there's a lot of alerts going on, and well, I have a lot of charts open, so I have a lot of alerts. You don't have to keep these many charts open. I just wanted to show you the things that I like to trade, so I have a lot of alerts binging. But you don't have to keep these many charts up. But we're working on an extra advanced alert system for the Neon Breakout, so when that's ready, it'll be a wonderful little alert system, because it'll give you a pop-up alert when everything aligns. So for instance, here in the DAX, when the arrow, the big red pink, when the big pink arrow appears, the red hot dot appears, candle, trend slope lines, everything has turned pink, and in the bottom window it's aligned. everything is below this red trigger line and is pink. When all of those things happen at the same time, we'll get a sell alert. It'll be a pop-up audio alert that'll tell you to sell. So it'll be very accurate. And same thing for the buy alerts. You can see here the dots have turned blue. Everything is blue. The trend slopes are blue. And in the bottom volatility window, the two lines have crossed above the red trigger line, and the volatility bar is blue. So this would give you a pop-up alert telling you to buy. So it's a wonderful indicator, and we're trying to get that prepared as soon as possible for release. And so if you've already purchased the basic and the advanced Neon Breakout, you'll receive an email saying that the extra advanced alert for the Neon Breakout is available for you, and it's only available for people who have already bought the basic and the advanced system. You need to understand the system first. The alerts will do you no good. You won't even trust them unless you already understand the system, the basic system, and then in the advanced system you get the two divergence indicators. So you need to understand this window, how the two divergence indicators work and how they work together. You need to understand all of that before you'll ever trust the extra advanced alert system. So that's why we make it so that you have to buy the basic and the advanced system first before you can buy the extra advanced alert system. So we need you to trust the signals. So we're working on that. It'll be ready for release very soon. And in the meantime, the only other thing that I want to show you is if I go back to the Euro US dollar, I want to show you my currency strength meter, which you can now buy as a standalone indicator. So you just click OK, and then this is the currency strength meter, which you can reposition on your chart just by dragging it. And in the PDF for the currency strength meter, you're taught what all of these color values and numerical values are and how to use them and how to find a strong trending pair. Right now you see only yellow and oranges, which is kind of medium weak strength, and often, well, like for when non-farm payroll occurred, any news event occurs, you'll see some red and some blue. Red is extremely strong and blue is extremely weak, and we pair up a weak currency with the strong currency. We buy the strong currency and at the same time sell the weak currency. So it sounds complicated, but it's actually very simple and it's easy to learn how to use. And it helps you find trending pairs that have momentum behind them, because you don't want to pick a pair to trade that's very flat with no momentum. You want a pair that's on the move, and that means that there has to be a discrepancy between the strengths and weaknesses of the 8 major currencies, and you're going to pick a pair to look at based on one being stronger than the other, one being weaker than the other, and you're going to pair up a strong currency with a weak currency. So it sounds complicated, but it's really not complicated. The currency strength meter just makes it really easy to find pairs to trade, to go look at. And you only need the currency strength meter on one chart, and I just keep coming back to the one chart that it has it on, and I look to see what the strengths and weaknesses of the individual currencies are, and I'll decide, oh, the pound is yellow 3.1, that's weak, but the euro is strong 5.9, orange. So this would be a pair that I would want to go look at, because it means the euro combined with the pound, that pair is going up because the euro is stronger and the pound is half as strong, so it's on the weak side. So I'm going to go find here's the euro pound. I just drag it over and it'll change the chart, and you can see that the euro has been going up and the pound has been going down, so the pair has been going up, and that's been all morning long. This is non-farm payroll, but this started a long time ago. So the euro has been strong for a long time and the pound has been weaker compared to it. So that would be a pair that I would, not right now, I wouldn't consider trading it, but earlier in the day I would have considered looking at it. So the currency strength meter is very important for finding pairs that are tradable. If you're having trouble finding pairs to go look at to trade, this just takes all the pain away from that, because at a glance you'll be able to see which pairs you should go look at to find a tradable pair any time of the day or night. So that's the currency strength meter, which you can buy separately now. You can add it to the Neon Breakout chart. If you own the basic or the advanced Neon Breakout, you can buy the currency strength meter now separately and add it to this trading system. You can also add this currency strength meter to any other trading system that you happen to have and that you like to use. But I find this totally indispensable now. From actually many years I've been trading with this, and if I trade without it, if I don't have it on any chart to go look at, I feel like I'm trading naked. I could make a whole video just about trading naked. how I don't like to trade naked. I don't want to trade naked. So when I use a currency strength meter, I'm not trading naked. Hope that makes sense. I'm just making a joke. I'm just trying to tell you how important it is to learn how to use a currency strength meter. It can totally change your trading, turn it around completely, because if you've been trading low range pairs, meaning pairs that are not moving very much and not going anywhere, you're going to be frustrated and possibly losing money. But if you find pairs that are actually on the move, that are trending, and this at a glance will tell you which pairs to go look at, it cuts your time down looking for a tradable pair, and the pairs that you might want to go look at to trade are going to be on the move. They're going to be trending instead of flat or ranging. So your chances of success have increased phenomenally if you've chosen a pair to trade that is very strong currency against a very weak currency. You're going to be catching the big trend, you're going to be catching the move, and that means your profit potential is going to increase. So I find this absolutely indispensable for trading. I don't want to trade naked. I don't recommend that you trade naked. I recommend that you buy the currency strength meter as a standalone if you want to add it to any of your favorite trading systems, and learn how to use it. And it just takes you a couple of days to get used to it, learn the rules. The PDF has the rules and training videos, and I highly encourage you to buy the currency strength meter and learn how to use it. It's going to increase your trading wins just so phenomenally. You're just going to be so happy with it, I guarantee it. So thanks so much. I'm going to wrap up this video, and to recap, the advanced Neon with the key levels, which you don't get the key levels unless you buy the advanced Neon, and you don't get the 2 divergence indicators. This is the basic Neon template, which you can see does not have any key levels. So you do have the channel, the price channel, and there's no arrows, and you have the ones indicator, which is actually just a momentum indicator. There's no divergence indicator in the basic template. So it looks a little bare, don't you think, compared to the, let's see, we don't want to give you the extra advanced, but the advanced simple. The advanced gives you so much more information between the key levels, the arrows, and extra divergence indicator in the bottom window. And plus the Forex Factory calendar. These are the extra things you get in the advanced template. I think it's so well worth it. But then coming is the extra advanced alert template. So be on the lookout for emails about that when it's ready. Hopefully soon. So that just wraps up this video, and thanks so much for your time, for taking your time to watch this with me, and I hope that you enjoyed the video. And if you haven't purchased either the basic or the advanced Neon Breakout, I would encourage you, because at that point you'll be eligible to buy the extra advanced alert neon system when it comes out. And also I would encourage you to buy the currency strength meter as a standalone indicator, and that's something that I really highly recommend more than anything, because you can use it with any trading system, not just the Neon Breakout or any of my other systems. You can use it with any other trading system that you might own. So thanks again for watching. Happy trading, and we'll see you in another video.